This is the presentation on government bonds by Arnab Das. I'll be discussing about the government bonds of India, and quickly I'll be discussing about the overview of the presentation. The first topic will be what is a government bond, and the second option will be the types of government bonds in India, and the third one will be the advantages of investing in government bonds, and the last one should be like who should invest in the government bonds. I'm going to get back to the first point, that is what is a government bonds. Government bond in India is essentially a contract between the issuer and the investor, wherein the issuer guarantees the interest earning on the face value of the bonds held by the investors, along with the repayment of the principal value on a stipulated date. The government bond is a basically a debt instrument issued by the central government and the state government of India. And the issuance of such bonds occurs when the issuing body, such as the central or the state government, faces a liquidity crisis and requires a fund for the purpose of infrastructure development. And the government bonds falls under the broad category of the government securities, are primarily long-term investment tools issued for the periods ranging from 5 to 40 years, and it can be issued both by the state and the central governments. And the government bonds issued by the state governments are also called the state government development loans. So it's completely, I guess, it's clear what is a government bond. So I'm quickly going to the next topic, that is the type of bonds, government bonds in India. So I'm quickly coming to the first point is I have noted down 4 types of government bonds, and there are other more types of bonds are there. So I'll be focusing on the 4 government bonds only. So the first one is the fixed rate bonds. What is the fixed rate bonds? Fixed rate bonds are the fixed rate of interest which remain constant throughout the tenure of investment, irrespective of the fluctuating market rates. So it's kind of like the interest will remain stable in spite of the market fluctuations. So a person or the investor can invest on the fixed rate bonds as there is a very less risk, as the interest rates will be constant. So the next point, the next type of government bond is the floating rate bonds, that is FRBS. And the floating rate bonds are periodic changes in rate of returns. It means that the change in the rates is undertaken at intervals which are declared beforehand during the issuance of such bonds. And the floating rate fund invests in bonds and debt instruments whose interest payments fluctuate with an underlying interest rate level. And thus it means that the rate of interest will fluctuate, and it has been bifurcated into 2 components: a base rate and the fixed spread. And the fixed spread is decided through the auction remains throughout the maturity tenure. So the third type of bond is the sovereign gold bonds. And what does it mean? It means that central government issues a sovereign gold bonds where entities can invest in gold for extended period through such bonds without the burden of investing in physical gold. And the interest rate earned on such bond is exempted from the tax. And the price of such bonds are linked with the gold prices. The nominal value is reached by the calculating the simple average of closing the prices. And thus SGB and is denominated in grams of gold. And the bond is issued by Reserve Bank behalf of the government of India. So the last type of bond that I'm going to discuss is the 7.75 Government of India saving bonds. And this is a government security was introduced as a replacement to the 8% saving bond. And the interest rate of such bond is set as 7.75%. So it means that the interest will remain constant throughout the tenure. So I hope there are other more types of government bonds. I try to explain the first four types of bonds. So I'm going to the next point as what are the advantages of investing in government bonds? So the first one is the sovereign guarantee. And the government bond enjoys a premium status with respect to the stability of funds and the promise of assured returns. As government security are a form of formal declaration of government debt obligation, it implies that the issuing governmental body's liability to repay as per as the stipulated terms. And the second point is inflation is adjusted. As the balances held in inflation and index bonds are adjusted against the increasing average price level, or on the other hand, the principal amount invested in the capital index bond is also adjusted against the inflation. This feature provides an edge to the investor as they are less susceptible to the financial undermine as investing in such funds increase the real value of the deposited funds. And number three is the regular source of income. As per as the RBI regulations, the interest earning acquired on the government bonds are supposed to be diversed every 6 months to such debt holders. It provides the investors with opportunity to earn regular income by investing in their idle funds. So these are the advantages on investing in the government bonds. So the topic will be the disadvantages. So the first point is a low income. As on the other hand, the 7.75% interest rate on the government of India saving bond interest earning on the other types of bonds are relatively lower. It shows that the if the 7.5% is the return is the interest rate, as normally in India there is a 5 to 6% there is an inflation rate. So if we see the net income is only the 1%, this shows that the income is very low as in the fixed rate government bonds. And the next point is a loss of relevancy. As the government bonds are the long-term investment options with the maturity tenure ranging from 5 to 40 years, it can lose the relevancy over the time. It means such bonds value loses relevance in the face of inflations. So I hope these are the two types of disadvantages I have discussed. So the next point is who should invest in the government bonds? As the government bonds are one of the most secure form of investment in India, attributed to its sovereign guarantee. Risk-averse investors who prefer superlative security of their investment, devoid of uncertainty created present in the market-linked instrument, can look to invest in this type of securities. It also suitable for the long-term investment option for the entities that do not have the experience in investing in the stock market tools. So the a person who doesn't have the idea of the stock markets and who are the beginners who doesn't know and who doesn't want to exposed to the risk, they can easily focus and can invest on the government bonds. And the Indian government has undertaken several measures to ensure the government securities gain understanding popularity among the retail investors, at the same time simplifying the methods of subscription for the retail investors. And hence the entities seeking to dilute or diversify their investment portfolios or starting their venture as the investors can consider investing in the government bonds. So I hope my all the points have been discussed, and thanks for watching. Thanks.